you, Naveen, for joining podcast, the BizTech Pulse. It's been a great journey for you from where you started in your career and the way things are progressing. You have done multiple financial transformation and gained experience by doing so many projects. If you can share your journey with our audience about how you started today into a role of a CFO, that will be great.
It's my privilege to begin with. I'm a qualified chartered accountant, passed out in 2005 batch. I started my career in FP&A, which is the financial planning and analysis function in one of the big multinational organizations based out of India. As a young chartered accountant, I think it was a great exposure, A, with respect to the brand which I was working with, and B, with respect to the work or the profile which I was handling. I was into FP&A doing the financial planning and analysis for the entire organization. It's a pan-India organization based out of Gurgaon. That's where I started my journey. After working with them for a couple of years, did some automation projects. Early in 2006, 2007, I decided to move back to Mumbai. From there, I was glued to the city for the vibrancy it brings. I was searching for an opportunity, and in that journey, I got an opportunity to move back to Mumbai, and I took that opportunity and joined Colgate-Palmolive as the sales finance head for their regional office based out of Mumbai. I moved on to do multiple roles over there, did my internal controls role, did the financial accounting role. From there, I moved on to a very unique role which most of the finance professionals doesn't get. I got an opportunity to work with Pepsi. I was part of the sales hierarchy, but of course, being a finance guy, my role was to bring the element of finance into the heads of the sales. Right, that was a very unique opportunity which I got working with the sales organization, bringing the element of finance into their day-to-day working, not just guiding them but helping them execute in the market. That's where I call this role as a very special, a very unique role in my career, which actually helped shape my career for the future roles. If you work on the field, you will realize the challenges, the know-how of the business, and that's where your entire approach towards resolving any issues, if at all they come to you, is very different rather than just sitting into office and trying to academically. That was a role which actually shaped my career, as I said. And then I moved on to do multiple roles into multiple organizations, right from transactional services. I was setting up the captive for the organization to working capital management, then moving on to do strategic finance role, wherein I was helping the organization build strategies to navigate some of the financial challenges. Then did the core role of accounting and treasury before I moved into this role as a CFO for Sugar Cosmetics. In my career, spanning over a period of 19 years, I have done multiple roles into multiple organizations, both MNCs and Indian organizations, and gained experience to understand the multiple facets of an organization into a role.
It's a great journey. And one of the things which is happening, I'm sure you'll also see, the CFO role has become more of a chief value officer role. This shift, where especially the way the finance supports the business strategy and the value creation today. Can you elaborate a little bit more? What is your thoughts on the same?
Thankfully, my era is an era wherein a lot of things are changing. A lot of things which used to be a traditional way of working are changing. Thanks to AI, ML, the automation and the digitization phase, a lot of traditional things are changing, and so is the role of a CFO. If you ask a non-finance guy about what he or she thinks about a CFO, the first instant reaction which the person would have is, these guys are the guys who manage P&L, or these guys are the guys who gives us budget, or these guys are the guys who cut expenses. These are typical traditional association of a finance guy for non-finance point of view. That's how over the period of time, we as a finance professionals have built our reputation in the organization. We are known for managing the financials of the organization, and we are also known for managing the budgets and stuff like that. As I said, my era is an era wherein a lot of changes are happening, a lot of traditional things are moving and non-traditional things are coming in. That's where I think the role of a CFO is also changing. I call it as the Chief Value Officer role, the CVO role, wherein it's not just about managing the day-to-day finances. It's not just about managing the budgets, but it's about about bringing the value to your shareholder. It's about creating the value for the organization and for the shareholders. That's where the role of a finance function, the role of a CFO has moved or taken a new shape from not just managing the finances, but also creating value for the organization. To me, I see this role as a role which can provide enormous insights to the business, can work with the business leaders on a day-to-day basis, and also strategize the long-term planning and the long-term growth of the organization, not just from a top-line perspective, but also from a bottom-line perspective. In the evolving era, the role of a CFO is also changing, and it's more about how do you create value to the organizations along with the traditional things which typically finance function used to do.
Just to double click on that, right? What sort of value creation? How do you do that?
For example, there are a couple of things which is actually helping this role move towards a CVO or a Chief Value Officer. First and foremost, of course, the use of the digital technology, the use of the AI, wherein a lot of these things which otherwise used to take a lot of bandwidth of the finance function are now being taken care by the machine or AI, which means that the finance function can do stuffs beyond crunching numbers or beyond presenting the analysis. The thought process has changed from not just managing the numbers, but also providing insights to the business. Typically, we finance guys are brilliant in doing analysis. Yeah, you throw up the numbers to us. More often than not, we will crunch those numbers and bring beautiful analysis. In many cases, the analysis is limited to the extent the bandwidth allows us to do that. And of course, to the extent we have the knowledge to do the analysis of the related issue. With a lot of these transactional things getting taken over by the AI or the ML, the bandwidth of the finance function is much more released today. That's where the function is able to take those challenges to deep dive into the issues and bring out analysis which are really helpful for the organization. That's one part wherein the role is making the change. The second part, something which I can correlate over the period of time as part of my journey, is this function or this role, let's say the role of the CVO or a CFO, is actually working very closely with the head of sales or with the head of the organization, the general manager of the organization, in terms of not just doing the analysis, but also bringing the insights or creating the strategies in terms of how can we achieve more growth, how can we be more profitable, or how can we be profitable in case we are not profitable. This is not just about number crunching. This is about providing opportunities or providing the organization the thinking in terms of the avenues which are available. For example, in my career, I have been into a lot of these kind of discussions when my role wanted me to discuss with the organization, or say very specifically to the sales organization, in terms of how can we bring more. As a part of my role, that was expected out of me, which means that it's not just about numbers, but it's also about giving a fresh perspective to the functions outside finance in terms of what else can be done. You take an example of sales, you can take example of marketing, supply chain, HR, you name it, and there would be avenues wherein the finance function is actually playing a major role nowadays in terms of creating the strategies for that function, helping that function grow beyond their of duty. Hence, in my view, it is taking the shape in terms of moving from the finance management to a business management kind of scenario. That's where a couple of examples wherein the role is already helping the businesses, not just with finance, but beyond finance as well.
Now, one of our earlier discussions, you have mentioned about auto claim processing systems. The claim processing area is definitely an area where a lot of automation is happening. Help me understand what inspired the transformation and what are the key takeaways from implementing such innovation earlier on. Especially you have done this a little bit earlier. We are talking only now, right? You have done this way back in 2008 or something like that in the time frame.
This happened almost a decade and a half back in my career, as you rightly said, very initial phase of my career, wherein my team used to get double A4 size paper based claims from the distributors. It was a manual claim which was routed to the corporate office from across the geographies, the length and the breadth of the country. We had a distribution network across the country. From there, the transportation or the movement of physical double A4 size paper-based claims used to move to corporate office. As you can imagine, with such kind of movement, all things like lost in transit, the delay, everything was happening. It was a scenario wherein no one was gaining from that particular way of raising the claims and processing the claims. My average cycle time for claim processing was more than 60 days, which means that I was blocking the working capital of my business partner, who was the distributor in this case, for more than 60 days. That's where he was not able to put that money or more money into the business and grow along with us. It was a loss for everyone. Neither the distributor was winning nor the organization was gaining. On top of it, there were issues with respect to papers being misplaced, papers not being handled correctly, so on and so forth. That actually transpired the organization to think, as you said, at a very initial phase in the Indian FMCG market, to move from the paper-based claims to electronic-based claims. There was the infrastructure which was set up across the organization, help get that part in terms of automation of claims. I was fortunate enough that organization gave me an opportunity to lead that particular project because I was based out of Mumbai. They wanted to do a pilot in Mumbai. At the end of 6 months, we were actually able to make live the project in the western part of the country where I was based out of. From a 60 days plus cycle time of claim processing, we moved to 5 days of claim processing.
Wow.
You can imagine the kind of release of working capital it would have had for the distributor. From there, the distributor was actually able to put more money into our business, and he was growing, we were also growing. That's the financial impact, that the working capital is getting released, he's able to put more money to the business is growing. These are all financial things. Apart from financial things, there were a lot of administrative hassles which were taken away by this automation, right? No more movement of physical claims, no more waiting for the claims, no more waiting for the freight company to deliver claims, no more lost in transit, no more lost of paper. And once the claim is processed, there is no requirement now for me to archive those physical documents. Earlier, I used to also have the requirement to archive those physical documents. It was not just the financial help which both distributor and the organization got, but it was also to do with the administrative help, because my team was able to process the claim at a click of the button. That was the kind of impact this particular project had on the organization. As you rightly said, actually I was fortunate to do this project almost a decade and a half back in my career, which was at a very early stage when not many companies in the Indian FMCG space were of that. That gave the organization the early move advantage as well, and we could leverage that to help grow our business. So
Sorry for interrupting. Was it in-house developed technology by your company, or external consultants came and did some technology implementation? Can you do a little bit on that?
It was more of an in-house developed team. Of course, it all started with implementation of DMS at the distributor system. DMS stands for Distributor Management System. We took the help of a third party who provided us with the DMS, and we were able to implement the DMS at all the distributor points across the country. From DMS, it was the in-house IT team who developed this entire project for us. From DMS, I was able to manage the secondaries, I was able to manage the schemes, and basis that, the claims auto raised through the DMS. Once it is approved by the organization, the claims are auto posted in the ERP as well. It was a combination of a third party tool, which was the DMS. From the DMS, it was an in-house capability which helped us deliver that project.
Very nice, very nice. So you had mentioned in one of your earlier assignments, you spearheaded a sales automation initiative which directly influenced the bottom line performance. How can finance leaders drive similar frontline impact across sales and distribution today? You can share your experience.
It actually starts with, you have to identify the problem. If you don't identify the problem, the solutions would not come in, right? Once you identify the problem, you have to break the problem to solve the problem. Many a times what happens is we identify the problem and we try to solve the problem in one go. That's where many a times we don't succeed. First, we have to identify the problem, and then we have to break the problem to solve the problem. I think these were the two levers which actually conceptualized this entire project of sales automation, which again I was very fortunate to do and lead this project in Mumbai. In one of my organizations, merchandising used to be a key aspect of how we are able to do business. Mostly in India, it happens that what you see on the shelf of a retailer is what is getting sold to the consumer, right? Not many companies would have a brand loyalty in terms of consumers getting fixed to a particular brand. Yeah. Today also, the Indian consumers are mostly driven by price, availability, and then by brand. Although the pattern is changing, but I'm talking about again again a decade back project which I did way back in 2013, 2014. At that point in time, the merchandising used to be a key aspect of a key lever to deliver the business. The organization identified this as a major problem, that in many cases, the sales rep who is actually supposed to do the merchandising is not able to do the merchandising. There might be various reasons. A, he might not be able to get enough time because he has to cover a lot of outlets. B, it's into a seasonal business. In a season, there's a lot of pressure because a lot of demand gets generated. And because of that, he took a toll on the merchandising not doing the way it should have been done. There might be various reasons, but the issue was identified by the organization that we need to fix the issue of merchandising. Once we identified this as a problem, the brainstorming happened in terms of how do we do it. And that's where this entire concept of sales management automation came in. We were trying to develop a tool for the sales guys, manage the day-to-day affairs which otherwise a sales rep would be doing. Just to clarify, it was not to say that this automation tool would also do the merchandising. Merchandising is something a person has to do by his own. No tool or no machine can take that part away from it. All things which otherwise a machine can do is what we were trying to automate so that he can devote full time on the merchandising. That's where this entire tool came into picture. The conceptualization of that tool came in. Bombay being one of the most challenging markets for the organization, I was given the opportunity to lead this project and see how this shapes up. What are the feedbacks which we were able to generate from the implementation? In a nutshell, this project helped us bring the element of doing the right merchandising into the minds of the sales rep. If the merchandising is to be tackled, the other work which otherwise a sales guy does in terms of when he's doing the everyday calls, when he's visiting the outlets, he's doing a lot of things. For example, he's counting the inventory at the outlet. For example, basis the inventory, he's trying to generate what is needed, what is not needed. So he's trying to generate an order for the organization. Most importantly, he's also trying to pass on some of the schemes basis what his relationship with it would be. So these are things which he was doing over and above the merchandising, which was the key aspect, which was missing to some extent. This tool or this project to automate all other things other than merchandising. For example, the moment the sales would open this tool and open his beat for the day, these outlets would pop up on his screen on a small device, which is a mobile LED device. He opens that outlet and then the inventory for that outlet would be seen on the app or on the tool, which means that he don't have to count the physical inventory on a day-to-day basis. Basis that inventory, the tool was capable to also generate a suggested order for that outlet, which also means that he don't have to discuss or he don't have to generate the order by his own. The tool has the capability, basis the inventory levels, to generate or to suggest an order. More importantly, this tool was also controlling how much schemes or discount basis the volume which the outlet is buying or recommended to buy, how much scheme or discount we can apply, right? All of that was taken care by this tool through a centrally managed system, which means that the time which the sales rep has to spend in the market was available with him. Hence, he was able to do the merchandising well. This tool helped the organization manage the operational efficiencies which the market is expecting, and also this tool was able to manage the financial aspects in terms of schemes and discounts, which ultimately resulted into incremental bottom line for the organization. This tool was a very comprehensive project. Of course, it was meant for the front-end sales guys, but at the end of the day, it was also meant to deliver incremental bottom line to the organization.
Was there a visible change in the numbers? If you can share a few numbers at a high level.
As I said, the first issue was the merchandising. When we were identifying the problem, as I said, you have to identify the problem to get a solution. When the problem of not doing the right merchandising was identified, we were actually shocked to see that in many cases, the merchandiser was actually spending less than 10 minutes in an outlet. In an industry, the merchandising actually takes nothing less than 20-25 minutes. Then you have to speak to the owner, you have to get the order. It's actually not less than 30 minutes job. The sales rep was spending less than 10 minutes in the outlet. It means that he's not doing the merchandising, he's not doing the inventory count, he's only speaking to the owner and just generating the order. With the help of this tool, we were actually able to implement kind of SOP for the sales rep. What is the minimum time which you have to spend into the outlet? Actually, the average time spent in the outlet went from roughly around 10 minutes on an average in an outlet, around 22 minutes on an average in the outlet. It was more than 2x time which the merchandiser or the sales rep was able to spend in the outlet. That's the first benefit which the organization got. The second, as I said, was also meant to control the schemes and all the leakages which you typically can associate with a scheme and discount. It was to bring the bottom line to the organization. Over the period of next 1.5 years after the project was implemented, first in Mumbai and then pan India, there was delta increment of the bottom line by around 80 bips to the organization. That's a huge number given the fact that it was a medium-sized organization or a relatively big organization. The impact on the bottom line in terms of the absolute number was significantly high. Of course, we were able to control the leakages which otherwise would have happened. Typically, you can associate those kind of things in schemes and discounts. These were the visible benefits, but to me, the most important factor was the time which was spent in the market, the time spent in the out. From that, the products were rightly placed, the planogram of the products were being followed, and as I said, what you see is what you sell. This concept actually proved that if my products were rightly placed in a right manner, the offtakes or the end consumption to the consumer would increase. A win-win for everyone. The outlet is winning, and so is the organization.
In one of your earlier experience, you had a very unusual challenge of managing excess cash in the post-COVID area. Can you walk us through how you approach the cash repatriation while navigating the Indian regulatory environment?
It was a very unique problem which I was facing post-COVID, as you can imagine and also heard. A lot of companies are actually facing the problem of working capital, right? Cash was king and cash was in crunch, as simple as that. As against the tide, when most of the organizations were running short on cash and having issues with respect to working capital, I was fortunate enough to work in an organization which had excess cash. I was uniquely placed in terms of how do I manage my excess cash? And at some point in time, that excess cash was above what I would have expected or what the parent organization would have expected us to keep at local India level. That was a very unique problem which was thrown to me in terms of if you have excess cash, find ways to trade cash back to the parent organization, of course, not based out of India. Right? I was heading the treasury function in the organization. I was given this project to first evaluate all possible avenues to repatriate cash. All of you know that India is a bit regulated market and the foreign currency moving out of India is regulated by RBI. The compliance with respect to FEMA and everything comes into place. It was a bit challenging, bit tricky thing because it's a bit regulated. It's not that easy that you repatriate cash back to the parent organization. I took this challenge. Of course, it started with me getting engaged with a lot of bankers to understand regulations will allow us to repatriate cash. A lot of discussions with a lot of banks in India. Fortunately, some of those discussions happened along with the intervention of RBI. Some insights in terms of how RBI is looking into these kind of things. We gathered that information that what are the possible avenues. Apart from the regulations, there's also an issue with respect to taxation. These transactions do attract tax positions not just for India but for the receiving country as well. We were actually very carefully evaluating the tax implications because each option which we were evaluating to repatriate cash also had an element of tax. It was a holistic approach that first we see into the regulations with respect to foreign currency movement out of India and then the tax implications of that particular transaction. It was a project, as I said, which we undertook in terms of all possible avenues. We were able to successfully emit cash back to the parent organization to the extent the regulations allowed us, to the extent the avenues available for us, and very uniquely placed. As I said, I was actually running after the banks to say, you know what, I have excess cash, please tell us ways to repatriate. Whenever I used to reach out to bankers, they were surprised. They said clients reach us to say we need funding, we need cash, and you are saying that we have excess cash. Even the bankers at some point in time were actually uniquely challenged, because as you can imagine, this solution is not readily available, right? Even they were doing the brainstorming, we were doing the brainstorming. Fortunately, over the period of time, we were able to repatriate a large part of excess cash which was available.
Is there an upper limit where you need to see, for example, if you have 50 crores or 100 crores excess, then you need to go to the RBI. What is the minimum? What is the upper limit in which you need to get the approval?
Surprisingly, there is no upper limit per se in this case. Each transaction which involves the foreign currency remittances out of the country involves the monitoring from the regulatory bodies. In this case, even a 10 crore rupee which you are sending out of the country would attract the monitoring of the RBI. If you are remitting 10,000 crores, it would also attract the monitoring of the regulator, which is the RBI in this case. There was no upper limit. As there are scenarios or there are situations wherein the RBI allows us to repatriate cash, and we were trying to understand, do we fulfill those conditions which are mentioned in those scenarios? I explained earlier that we are also trying to evaluate the tax implications on all of these. These were some of the things which we did, and we were able to repatriate cash.
What sort of tax implications are there in this? Do you pay a particular fee on the amount? Is that how it is?
It's not about particular fee, it's about the transaction which you are doing. Yeah. Very common example of repatriating cash is the share buyback, right? The parent organization who is your major shareholder, they buys back the shares. In return, you buy back the share from the organization, and in return you pay cash. This transaction is akin to a dividend transaction in the Indian tax laws, right? Not similar, but it is akin. Whenever you do a transaction of share buy with your parent organization, it would attract dividend, right? Depending upon which country, which transaction you're doing, but it would attract tax implications.
Okay,
Similarly, in our case, the receiving entity, India had a treaty, the most favored nation kind of treaty with the receiving entity, the country in which the entity was placed, right? Even from the receiving entity's country's perspective, there were some tax challenges or implications on these kind of transactions. It was not just Indian tax. The receiving country's tax is what we evaluated before we took or we exercised the avenues to repatriate cash back to the parent organization. Quite challenging. Thankfully, in my association with that organization, I was very uniquely placed with a very different challenge because it was not a commonly used practice in India or commonly used transactions. Of course, a lot of organizations does it, but post-COVID doing it was a bit special for me.
I think now I know that currently you have a global role. Help me understand what keeps you awake in the new role, in the new organization. The reason why I'm asking this is nowadays CFOs have a few pain points. Technology is one answer. Sometimes regulatory things which you shared with us, that's another. What keeps you awake in the night in your current role, if I may ask?
Not just my current role, but in all my previous roles, one thing which used to keep me up on my toes and keep me awake in the night was, are we following the right processes? Are we complying to the laws? Are we complying to the regulations? India is a land of law. A lot of regulations around how you do business. As a finance professional, it's more of a how do you create value to the organization? To me, it was more to do with saying that, are we doing the right things in the right manner? Is the organization capable enough to set the right systems in the place? Is the organization taking steps to ensure that the processes are being correctly executed the way they are supposed to be executed? Last but not the least, are we complying to all regulations or the laws in which we are operating? These are certain things which keeps me awake. In my current organization, of course, as a CFO, my prime responsibility is to manage the financials, to manage the P&L. That also keeps me awake because every organization has their own set of challenges, and so are the challenges for my new taking the journey towards the growth mindset. Once you on a high kind of pitch, the systems, the processes, and the compliances becomes far more important because many a times you take shortcuts to achieve growth, but they might not be the right things or right processes. With high ambition of growth, there is more requirement of correct systems, correct processes, and correct compliance. These are certain things which actually keeps me awake. As a finance guy, I'm always thinking towards that and continuously evaluating and taking corrective actions where things are not happening the way it should happen.
You are aware of the HighRadius platform and even you conceptualized the ESG-linked dynamic discounting. Where do you see the most immediate value of AI ML in modernizing the CFO's office?
There are already a lot of things which are being done. Very simple example in the today's scenario when cash is king, how do a CFO's office get to know what's my cash balance at the beginning of the day? Maybe 5 years back or maybe 10 years back, this information was not available on a daily basis, right? Even if it is available on a weekly basis or fortnightly basis, this information used to take a lot of time for people to make, right? You have to collect the information from the banks in terms of what is your collection, then what is your payments. You have to take the information from ERP and arrive at the closing cash balance or the opening cash balance for the day. With the help of AI and ML, all of these things are digitized or automated now. On a click of the button, once I log into my system every day in the morning, I get to see what's my cash balance. That's where things like AI or ML have actually helped the CFO's office to get the information at a click of the button. You would agree with me, if the correct information is available at the click of the button, the associated actions can also be taken accordingly. No more I have to wait for a month end, or no more I have to wait for the month period and review to understand where is my cash cash, if I have to take some actions, what are the actions I need to do? I actually take the actions during the month in case I see that there's a problem on the cash side, or there's a problem on the payable side, or there's a problem on the collection side. There are these dashboards which a lot of these companies and a lot of these fintech companies in India have created or have helped the finance office or the CFO's office to create with the help of those informations which are readily available at almost on a daily basis. The CFO's office can take corrective actions in case there is a need to take those corrective actions. That's one thing which I can see how the AI and ML is helping shaping the CFO's office into a CVO's office, as we spoke earlier. That's one part. The second part is also in terms of how do we navigate the challenges of mitigating risks. When the organization becomes relatively big, the risk element also becomes big. With the help of these AI and ML, there are a lot of predictive technologies which can help predict the fraud or help predict the risk at the very inception stage. I think these innovations are helping the finance function to take actions at the very beginning. Gone are the days when in many of the cases this was an element of surprise. The fraud has happened or the risk has happened. The organization or the finance function is getting an element of surprise. With the help of these technologies, you can actually preempt some of these risks. Of course, it cannot be eliminated in totality. You still have some risks, but to a very large extent, these kind of risks are getting highlighted at the very beginning. There is a predictive analysis which says that if you do this, there is probably a chance of you entering into that kind of risk. Accordingly, the CFO's office is taking cognizance of those risks and taking the action. These are some things which are helping the CFO's office move towards CVO's office.
Definitely. I think I recently attended a CFO's conference, especially from a organization, a HighRadius organization. I was surprised the amount of sharing which all these companies did in terms of how effective the usage of the product. For example, the order to cash process, when you automate or start using certain platform, irrespective of whatever underlying ERP you have, you may have an Oracle, you may have SAP, you may have Dynamics. There are fintech companies today, especially HighRadius, where they bring this data and get even external data from the credit bureaus and credit analysis, even the news feeds. If there is a risk of your payment because of all this external data, it analyzes this and says, hey, there is a good chance that you may not get paid 10% of your payment or 15%, 5%. It's a very high risk because of such reasons. It puts it in various buckets. The risk level it collects, as you said, it's real time. They have this real time information from all these credit bureaus and third party systems, and they bring those things together and then share the information. I have seen one of the chemical company here in Houston saying that one is the failure of payments in the last 3-4 years is zero because of that. When people adopt these sort of technology, they see the value. I was amazed. Every organization, whoever has deployed, has seen so much benefits of these technologies. The good thing about this, what I have seen with this company is people deploy it and then move on to other areas. They start with order to cash, then they go to the cash app, they go to treasury, they have some treasury products. All these products, they collect, and again, they have this agentic AI, the level of automation which has happened. So they automate the basic process throughout, and then there is 20-30% of process still manual. You need intervention, but your resources, they become more strategic. They can focus more on main areas rather than doing the mundane or calling up people for payments and stuff like that.
Picked up the example of order to cash and then moving on to treasury. In India also, there are a lot of these companies who have this product wherein the entire process, right from order to cash and then from cash to deployment of that cash, is an automated process. The tool doesn't take the decision on its own, but they provide you that insights or the analysis. Somebody has to just manually approve. The tool would say, okay, if this is your sales, this is your collection, this is where you land on the cash. If you want to better utilize your cash, this is where the investment avenues would be, right? This journey from invoicing to the customer to collecting cash from the customer and then putting that cash to provide the additional return in terms of the investment is now more or less taken care by these automation tools which are available in the market. As you rightly said, the finance finance team role has become more strategic, suggesting this investment avenue, is it the right one or not, rather than crunching the numbers to arrive at, okay, this is what we need to do an investment. These kind of technologies, of course, have helped the finance function move towards more of strategic roles. That's where I said in the beginning that the bandwidth is getting released for the finance function to move away from the mundane transactional roles. The finance function provides these kind of strategies. They are automatically being seen as the business partners or the value creation. That's where the de facto movement to the value creation role is happening for the finance function. I have seen these technologies from very close quarters in the last couple of years. In my views, these technologies have played a huge role in transforming the finance function. In the years to come, these technologies will further enhance the role of the finance function, and they would play a major role to really transform the finance function from just number crunchers to being seen as more value creator.
How do you keep up yourself with all this changes which is happening nowadays? It is so rapid. Do you follow any podcast, or are you in any professional groups, or you read certain books? Can you share of late in the last 6 months any financial related books you have read which had a huge impact? Some podcasts which you did? I just wondered if you can share your wisdom.
There are a couple of things which I do. Unfortunately, I don't read too much of financial books, to be very frank. I do read books, but not of financial books. I do a couple of things which actually keep me updated in terms of how these things are happening, right? I am a part of the professional network, and nowadays LinkedIn, WhatsApp, these are the kind of platforms wherein you get a lot of professional networks. Through those professional networks, the information sharing is happening on a real time. To give an example, there's a recent regulation which the government of India has changed for the MSME vendors, medium, small, and micro enterprises. That change, that regulation has triggered some changes in the organization in the way we are dealing with these kind of vendors. Now, thanks to my professional network, I was able to quickly understand that there's a change and also understand that how do we comply with that change. Is there any use case in the industry? Are there anyone who is already taking those kind of interventions to make sure that we are compliant to the change? In a matter of couple of days, I was updated in terms of what's the thing and how do we navigate, or how do we make sure that we comply to that change. Thanks to those networks, we were able to quickly connect and share the information. Sharing the information on the professional networks, these social media platforms like LinkedIn, is really helping. That's one. Number two, being a finance guy in India, a lot of revolution has happened in the banking sector in last couple of years. With fintechs coming into picture, the bankers have been pushed to think beyond their normal operations and create some innovative products, which means that a lot of these technological interventions have came in the banking sector. As a part of I actually keep meeting the bankers once in quarter to understand these things, or where are these new products which are coming. It may not be for us, but maybe for some other clients which they would have implemented. Can we get benefit of those particular products? That's where I think these innovations which are happening in the fintech industries or in the banking sector, I'm able to actually get an update with my conversations with the bankers. I keep meeting those bankers once in quarter to see what's coming up, what's new in the area, and accordingly keep myself updated in terms of the innovations which are happening. Last but not the least, there are a lot of these conferences or seminars which are being conducted in terms of how the AI ML is shaping the finance function, what are the transformations which are happening in the industry. There are a lot of these forums where you get to hear from your peers, hear from your seniors in terms of what they're doing. At times, you also get a chance to share your views in terms of what you think would happen. For example, in a couple of conferences, I'm a part of the panel and I'm sharing my thoughts in terms of what's coming up. Those platforms also provide an avenue for a lot of people like us to understand what's happening in the industry, and basis that, what's the use case which we can use to adopt the same for our respective organizations. These are certain things which keeps me updated in terms of what's happening. The professional network, the banking network, and the conferences and the seminars do help us to update ourselves and react to the situation accordingly.
Thank you, Naveen. It's been a very elaborate discussion. You have any closing comments for the audience? Some takeaways, what you think happening in the market in the next 6 months or 12 months? Anything earth-shattering or something you have to look out for?
I would only comment on certain things from a finance point of view. I would request my finance colleagues across the organizations, across the networks, start thinking not just from a traditional way of doing finance, but also non-traditional ways, right? Gone are the days when you have to think what is debit and what is credit. There are ERPs. When I was pursuing my chartered accountancy, there were systems which were not allowing dual entry systems. Each debit has to be correspondingly passed with a credit, and that was manual. manual. Now with ERPs coming in, that has gone. Every debit is automatically provided with a credit. No more matching of books of accounts kind of thing. That's where the journey of finance function has started. My request to all my colleagues across the industry would be innovative. Try to take those out of your comfort zone. See what can be done. Try to take the help of these technologies which are now available in the market, like AI, ML, predictive technologies, which can help transform your finance function, and then be the business partner, be the value creator for the organization and for the shareholders of your organization. I would close my comments with saying that there's a huge scope for the finance function to be a front driver of the business. There are these concerns which I keep hearing, that with AI and ML, the jobs of finance would go away, the role of finance function would shrink. I don't foresee that happening, because these technologies are only providing us the challenges to be more productive, to think beyond our traditional way of doing the business, and be closer to the business, be the front end or be the driver of the business, and not just help the business grow, but drive the business grow.
Thank you, Naveen. It's been a great discussion. I definitely wanted to hear down the line your journey with your new organization, and wish you all the best in doing the right things. We'll definitely stay in touch. Thank you for listening, audience, the BizTech podcast. This is one of the first in the series. We are looking forward to talking to other industry leaders to share what's going on the technology front and in the CFO's office. Thank you, guys.